Jeez, we're back on now. Traders, so yeah, it's been a few days since we had a little chat, and you're probably wondering my thoughts on some of the price action and what's been developing, especially in the pound. It's not the only thing which has moved. We also had some movement in the CAD. We'll touch on both, what the reasoning is and what the main story is going on there. But in regards to some of the developments, there's been some stabilization in the US dollar, dollar yen, and this is not uncommon going into a Fed meeting. It's unlikely that you have a lot of weakness into a Fed rate hike, right? So don't be alarmed or surprised by dollar yen grinding up. But the sustainability of the dollar yen rallies is in question. So what we've seen on Friday, we did have that nice little rally all the way up to 110.80, and then we had a fair bit of selling pressure come through, and then yesterday there was a bit more selling. We went back below 110. So orbiting 110 seems to be the play until we get that announcement out tomorrow. The first big announcement is this US CPI in regards to sort of front running or delaying your dollar yen purchases, because we're going to be playing the Fed via dollar yen probably, and I'll go over that a bit more in detail tomorrow. But in terms of catching dollar yen and the dips, you want to really be blowing below 110 and buying below 110, and you're looking for the base to be sort of developed here and for us to go back towards 112. Nothing crazy, just range trading in that particular pair. The longer it spends down here consolidating, the more likely we are going to have that next little leg rally. There's been many false dawns in the dollar yen though, so we won't get ahead of ourselves, but the fact that US stocks are holding, the Wall Street and the S&P is, and the fact that Comey is not really causing too much trouble for Trump trying to move on to new things, means that the whole Fed raising rates, tax plan from Trump, and fiscal stimulus from Trump is still on the cards, and that could have a second wave of focus on by the market and then lead to that rally. What is a little bit more interesting to me is the price action in the pound, in terms of we had some pretty negative result there in the election for May, and the sell-off was pretty small, and then the lack of a deal. I'm not sure what the latest is with DUP today. There's supposed to be a meeting today between the DUP and UK Mays, and they may get a deal today. But the lack of follow-through on downside suggests that perhaps there's going to be a new game played in the pound. And that game might be that there's a soft Brexit growing in chance, and the soft Brexit is less risky in terms of the UK leaving the single market, and also the effect on the UK banking sector. So that is probably going to be played via a positive reaction in the market, not a negative reaction in the market. It seems like the market's finding ways to rally on the pound no matter what. So I don't know. The whole downside story to me is, it's still real and it can definitely happen, but you gotta respect that. We could have easily been at 124 here, and the fact that we're holding up and there's a few rallies on really little news suggests that the pound isn't going to be as weak as some analysts have forecast. And so just selling the pound in general is a little bit more dangerous than I suspect the sentiment towards it is right now. So I'll be watching this. If we can get back above some of those lows from Friday, so highs from Friday and Thursday, then I think that the potential for recovery is really quite there. This is before we have a nice coalition agreement, and before we have any sort of focus on the Bank of England on Thursday as well. And so the pound is holding up well. I respect the price action. I'm not going to be looking to sell into that rally. If you were looking to sell into that rally, you'd actually be looking to sell soon. Yeah, you'd be looking to sell soon today. Now, let's not do that before we get the CPI numbers that come out in 10 minutes. You can sell it via the pound yen, or you can sell it via buying euro pound. Both those trades make a lot of sense in terms of following the trend. It's just not my game. Yeah, I'm not into selling the pound, given it's held up a lot better than I suspected it would. And so the actual, if anything, I might be actually sneaking into some longs if the CPI is stronger or at 2.7 as forecast, And we'll be doing that live. We'll look at the numbers come out in 20 minutes. So that's if you are a trend follower though, you're looking to buy euro pound soon, and you're probably looking to sell pound yen soon, just around the 140 level. But right now it's no reason to front, try and guess what the CPI numbers have been. They've been pretty wild and erratic. CPI just came out. Sorry, I was sleeping. Jesus Christ. I was having a little nap. I'm doing the early shift, 6 AM. I had a little nap. You alright, mate? Jesus. Well, this half explains a little bit of the punchy action. Okay, let me update you from a new perspective. Let me just go and read quickly an update on that. It's a bit of a mistake. It's unforgivable, boys. Sorry about that. Well, straight away I can tell you not to sell. Yeah, I mean the short squeeze can definitely be on here. Yeah, it's daylight savings changed. Little sleepy Tony. God, you think they pay me to do this for a living? Let me just quickly check the internals of that. It wasn't too long ago that we did the CPI live on this stream, guys. It's my bad. We have had some daylight changing shifts in the last couple months. I thought we actually might have been doing it live today. Forgive me. Everything looks pretty solid in that report. Highest level in over 5 years. I mean, that's something that the market can grab a hold of. Pipeline inflation shows signs of abating. Biggest change has come from crude oil year on year. Alright, so in general, these are the levels that traders are looking to sell into if we did have a bounce today. Now, we are up here right now. I'm not going to sell into these levels. So the 140 level was much talked about. I'll wait and see how it develops a little bit longer. Pivotal in the next hour, what happens. You can still roll over into more selling. What a timeline, Andrew, you're in the stream, mate. Do you have a timeline for the meeting today between DUP and UK May? Something during the day, probably UK time. Yeah, I wouldn't be selling. I know there's a lot of people out there looking to sell into this, but it's not my game. It's tentative, huh? There maybe there's no rush in terms of DUP want to play probably to get as most out of the deal they can. I don't think they'll be in any rush as well unless they get something like a cabinet member or something to take home to the roost. There's been a lot of talk about these guys though. They're pretty hardline conservative. Let's quickly look at some of the technicals on the daily here, just so we can see where we're at with some of these pairs. You can see there's been consolidation a lot across the board, and we are still focused on breaking out one way or the other. I mean, it is a little bit up for grabs how dollar yen reacts this week, but you wouldn't be crazy if you're looking to buy down here. This is generally a buy zone. But the pound does have a fair bit more room to the downside if it was to develop this way. So I suppose the bears are looking at, they're licking their lips saying we'll get to 125 eventually. Brexit talks can't be positive. Yada yada. It's just in the short term anyway. If I'm going to sell, I'm going to sell into a rally. A short squeeze, and let the market react to any sort of announcement of either May doesn't look like she's stepping down actually from what I've read, so that's not something you can expect this week. But what you can expect this week is perhaps more talk about a softening approach to Brexit. And what we want to see is these sort of headlines, confirmations, or else the market's reaction to them. If it develops into soft Brexit equals pound rally, May hard Brexit, and doubling down against Labour hard, sort of hard Brexit stance, and the pound wants to sell off on that, we could have more selling on the pound to go. But let's just see if it softens a little bit. There has been talk in the background that there is deals going on to sort of soften that that Brexit chance, soften the Brexit negotiation stance a little, sort of get Labour on board. $200 days around 125.70. It does seem pretty stretched though, doesn't it? The Euro 200 days all the way down at 108 seems pretty far away these days. Alright, so what else is moving? The dollar CAD's had a big sell-off last night. Now that's on the back of a Bank of Canada member coming across quite hawkish in the media in a speech. And this has some positive flow and effect for the other commodity blocks. So you did see Aussie dollar and the Kiwi dollar both have nice little rallies today in the Asian session. And oil has been quite well supported so far this week on the back of stronger comments from Saudi Arabia regarding cutting supplies to OPEC. So there is a case to be made for being short dollar CAD, and I know that's something that Nick and Steady Capture have been doing. That being said, the dollar CAD's suffered from lack of follow through as well, and so there's always been two-way actions even in sell-offs or in rallies. So this sort of lack of just continuation at these levels suggests that we could muck around between 132 and 134 a little bit longer. Selling towards 134 makes sense to me, and that seems far away, but it's not that far. Yeah, wouldn't take much Fed raising or oil reversing, then you do get a bounce back up to that, and it's a bit stretched already, so no need to hop on this for. If you're late to the party, you miss the party. Yeah. At least wait for a level above 133 if you're going to be selling into that. And if you're in the Kiwi's trying to break new highs now. You're pretty late to this party too. Now above sort of 72.50, we can talk about going up towards 73.80. But this is a little bit stretched too in terms of positioning now. Short term, this is a big rally, almost similar size to this one. You don't want to get caught long. Kiwi dollar in a reversal. It's one of the most brutal pairs out there in terms of the size of its reversals, and suspect that's closer than we think right now. In fact, I'll be looking to sell into anything 73ish if we get up there without a break. That's probably just a matter of time before we have a 200-point sell-off there. Alright. I've been sidetracked, been derailed by my preparation here, boys. I am flabbergasted. She'll be pushed, yeah. Yeah, that's right, me, myself. but that seems to be not happening straight away. So if it's not happening straight away, it might take a few weeks to develop. Perhaps they're looking for a new leader. I don't think Boris is the leader, right? He's makes about as much sense as making me leader of Australia. In terms of this Fed announcement, and we will look more into this tomorrow, what we need to be looking at, there's a couple of things to be looking at. There's this dot points that come out. Now it's it comes out with the announcement, and then half an hour after that we get the press conference from Yellen, where you get those nice questions about how she sees the chances of the Fed raising rates. Probably some questions on the normalization of getting rid of some of the bonds on the balance sheet, and you probably get some sticky questions along the lines of is the Fed worried about political issues, fiscal, and they probably are worried about fiscal stimulus plans from America. They don't seem to be in place anytime soon just yet, and so there is ways that you can come across as cautious. But that being said, you can't really raise rates, right, and come across too neutral. You have to be pretty upbeat. So the risk usually here in the Fed is that they do come across a little bit more aggressive than the market was priced in. I mean, currently the market's not even priced in December fully. And so there is room to move for sure in terms of the rates and the short-term rates, and that would be dollar-yen positive. I think it'll be hard for her to come across more neutral than the market's currently priced. So I would be I'd be positioning a little bit more for US dollar strength than weakness this week. That's why I'm a little bit more interested in buying dollar yen, even selling the euro a little higher. The euro also has some data come out. Now this is not as big as it used to be. This is a German Zoe survey, and it came out just as we started the stream, and you see the market didn't react at all. So economic sentiment was stronger. German economic sentiment was slightly weaker, but not huge miss in terms of the numbers in a pretty volatile sort of index. And there is a focus on the Fed about they are data dependent. They say that stuff a lot. And one of the pieces of data that's very important lately has been the CPI numbers. So the CPI numbers coming out pre FOMC tomorrow actually gaining importance, and a fairly strong reaction probably if there's a miss or a beat on that number. It's not the biggest sort of miss or beat number that does come out. The last 2 months have been pretty weak though, the headline. So there is that chance that if it comes in weak, it adds to the narrative that there is some inflation concern. And that feeds into the story that they don't raise again at the December meeting. And in terms of them selling bonds, and they've got 3 trillion bonds to sell, they haven't really been talking about that too much, but the market seems to be wanting more and more details from them. And the unwinding of that balance sheet is also a big topic that is likely to be brought up. And how the market reacts to that is, in theory, it's positive for the US dollar, right? It's another form of taking away the easing, because you're selling bonds, you're going to be increasing the yield. And the timeline they're expecting is to start this process in December. Now, if they do start in December, maybe they don't want to be raising rates in December and starting that at the same time. So if that becomes a little bit more of a story, and it could easily become a story, then what we could see is the pushing out of rate hikes and the beginning of balance sheet reduction rather than rate hikes as a way of getting out of taking away the punch bowl, as you could say. All right, and we haven't really seen the market reaction to that just yet. Yeah, we haven't seen the market reaction in terms of the bond market. Now the US 10-year is really quite low in compared to where it could be already this year. So if you talk to bond traders, they will tell you that they're a bit surprised by a US 10-year being so low. And last time we looked at this, it was actually 2.15. It is beginning to show a little bit of strength here. This is positive for the dollar. A breakdown below this 2.17 level was suggesting that we're going to get down to 2. And there's a big gap there, right? But then we have come back above though. Now the level that we talked about a lot in this stream is 2.3. If we get above 2.3, it's very hard for the US dollar, especially dollar yen, not to be rallying in that environment. So if you don't watch bonds, you may want to start to. It's going to get much more important as the Fed starts to unwind its balance sheet later, especially next year. And also it makes it a little bit easier to understand some of the movement in the currency markets. You might see some relatively large movements in the euro or in the or in the dollar yen, and you want to know why is it moving so much. And this central bank guy just said a little bit. Why is the market? Well, maybe the bond market just broke a key level, yeah, and that level has led to some follow through. And you're seeing yields go to new highs, and that's leading to euro going to year highs, or US yields are broken above 2.3. That's leading to follow through in dollar yen. And so even though Fed member XYZ just said something small, it's not so you won't be able to make a sense of the move unless you see the bond market. And I really encourage you to keep start to keep a little bit of an eye on it, and just know which levels are important. That'll help you with your trading. So after the CPI, and I was going to get to this after the CPI, if it was coming out during the stream, we're going to go starting to talk about the Bank of England. Now, just because of the timing of the Bank of England, we're probably not going to get any moving and shaking at this meeting, because it's a little too close to an election which hasn't been fully unraveled just yet. But the CPI number is going to be in focus more and more. And although they can say that the CPI number is just transitory and it's only because of the weak pound, they can't say that forever. And especially if we get above 3, that almost immediately suggests we're going to be raising rates, even though they didn't last time it did. I suspect that at these levels of interest rates, there is the potential for the market to start talking about rate hikes, and that's all you need. You can imagine a soft Brexit plus Bank of England looking to raise rates in December, or being the next bank to move, in increasing speculation, then you can see that feeds into a recovery sort of trade. So it's something to keep an eye on tomorrow, when there will be probably some commentary regarding it. On Thursday. And so, what we expect to see is in their central bank policy summary, the monetary policy summary, they're probably going to have to try and play down that CPI number. It won't affect the Emilio. It doesn't affect the Aussie at all. Pound doesn't have any sort of relationship there. But yeah, so this is more interesting. The CPI number being strong is actually a bit more interesting for the reaction from Carney and the Bank of England. But yeah, no, I said immediately after I saw that number that I wasn't looking to sell into the rally. I wasn't really looking to sell into the rallies anyway. But before I had that update, to me it's actually surprisingly strong. So I'll be looking for continuation here in the pound yen. And pound yen's really punchy, right? If pound yen can start to rally, then it can start to lead the pound and dollar yen higher too. So got ourselves some pretty nice levels to be watching right now. Alright, traders, CPI coming out. Just joking. Just joking. If you're interested in what the Canada comments were, Deputy Governor Wilkins gave a serious speeching outlining a more confident assessment of Canada's economy and suggesting potential withdrawal stimulus will be discussed. Alright guys, I'm going to be back tomorrow at the same time. We'll have a bit more of a focus on the FOMC tomorrow. And we will discuss some of the trading strategies around it. But we have to get past that US CPI tomorrow as well. So that's going to be the first thing to be discussed in terms of what you need to be focused on. And that can sort of set the expectations on the Fed a little bit. It's sort of like if we had the ADP before the NFP, right? If we get a strong inflation number, then all of a sudden inflation is going to be a question everyone talks about. But if it continues to be weak, which it has been for a little while, then there's going to be less pressure on Yellen to be coming across hawkish. And we'll discuss some of those strategies tomorrow. There's a couple of banks who think that they aren't going to raise as well. Now that's another scenario we have to talk about. That's extreme US dollar weakness if that happens. But the Fed hasn't been surprised in the market lately, so I don't think that's going to be the case.